Hello there, welcome to today's tutorial. Today's topic, we're going to be covering contractors. My name is Carly Rom. I'm the marketing representative of Griffin Underwriting. Quick rundown of our agenda. We'll go over a brief history about Griffin Underwriting. We'll cover some details on the product, commercial general liability for contractors, professional liability, pollution coverage, inland marine and builders risks, and then we'll finish with contractor bonds. As with every tutorial, I will end with a contact list should you have any questions or need any assistance at a later date. So Griffin Underwriting was founded in 1928. We still are family owned and operated by the Griffin family. We were one of the first surplus lines brokers in our region to be granted binding authority by Lloyd's of London. We have just over 100 employees throughout 3 different offices in the Pacific Northwest. We offer solutions for personal lines, commercial lines, brokerage, surety, and professional lines. We've written over $95 million in premium to date, and we are licensed in all 50 states, including the District of Columbia, which allows us to work with agents nationwide. So the difference between the admitted markets as well versus the surplus or non-admitted market share, if you can picture all of the market share out there in a box that sits on your desk, inside that box is a ball. Inside that ball is the admitted market share. This is where you, the agent, can place policies in your office within the standard or admitted market share. The space in between the admitted market share, i.e. the ball, and the box is where we reside. We're in the non-admitted or surplus lines market share. So anything that you, the agent, are unable to place inside the ball, that's when you would come to us to see if we can find a home for it in the space between the ball and the box. We can write all different classes of contractors. Just to name a few: developers, home builders, commercial contractors, hard to place subcontractors like roofers and siders, artisan contractors, the big guys who do the full tract homes, remodelers and handymen. We can write artisans with up to 50% contracted work. We also can write new ventures, those who are starting their own business, as long as they have a minimum of 3 years experience. When we're talking about commercial general liability for contractors, it pays the covered injury and damages to others resulting from the ordinary methods of construction and or installation. So it has perils, exposures, coverages, etc. on the general liability policy. When we're talking about inland marine and builders risk, this is the property that's covered. The forms are designed to fit specific needs, i.e. like an installation floater, equipment floater, or builder's risk. Surety bonds or license bonds, it helps to ensure all the parties involved in construction and development uphold their agreement. Pretty much if you're writing a general liability or any type of policy for a contractor, they're going to need a surety bond as well. We also write professional liability. It pays the covered damages resulting from improper design or advice or failure to perform the performed services. So think E&O coverage. When we're talking about third-party coverage, there's Part A, B, or C. So Part A, the bodily injury and property damage, think of it as the slip and fall coverage, damage to tangible or intangible property, injury due to sickness or death resulting from the contractor's operations. For this Part A section, the insured must be legally liable in order for insurance to kick in if there's a claim. When we're talking about Part B, this is personal advertising injury. It arises out of the false arrest, malicious prosecution, libel, slander, copyright infringement, that sort of thing. And then finally, Part C, this is the medical payment section, covers the third-party medical bills for an injury on the premises, not necessarily the job site. The insured does not have to be legally liable, so medical payments is often referred to as that good faith coverage. What this does is it helps maintain the reputation of the contractor. It also helps to decrease litigation costs. Common exposures for commercial general liability policy for contractors. You've got the premises, operation, products, completed operations, as well as contractual liability. So an example for premises, the wet stairs at a plumber's office causes a patron to slip and fall, having an accident. When we're talking about operations, the same plumber, he accidentally knocks a heavy pipe off a 10th floor balcony, causing damage or bodily injury below. When we're talking about products, the plumber installs a proprietary pump, the pump ends up being faulty, it starts a fire, causing bodily injury and property damage. Completed operations. This poor little plumber, he finally completes the job, but months later, there's a faulty ceiling work that causes a ceiling to collapse. This is an example of his completed operations. And then finally, contractual liability. The plumber who's contractually required to pay for an attorney if the building owner was sued by a third party. So subsequently, maybe a pedestrian was walking by, they got struck by the falling pipe, files a suit against the property owner. That property owner can then go back to the contractor. We're asked quite often about what limits should insurers have. We can't tell you what limits are adequate for your customer. Typically what we do see are starting out is 1 million with a 2 million aggregate. We can go as low as 300,000 with a 600,000 aggregate limit. You want to have that conversation with your insured though. Find out what their exposure is. If they've had prior coverage, look at their deck page. We can offer limits as high as 5 million. We also can offer a per project aggregate with some carriers and some risks. So have that conversation, but don't be afraid to ask our underwriters questions if you have them. Common exclusions for this particular type of policy, we've got the prior acts exclusion. When this is listed on the policy, it will not cover any work completed prior to the policy inception, even if the BI or the PD occurred during that policy period. We've got continuous and progressive damages exclusion. When this is listed on the policy, it applies to the BI and PD discovered over multiple policy periods. This protects the carrier from defending suits that occurred under other insured policies. Classification limitation. When this is listed in the policy, it only covers the insured's operations listed under business description of the schedule hazards. So basically, it will not cover any moonlighting excavation for this particular plumber, just as an example. And then some other exclusions: professional liability, condo and townhome exclusion, employer liability, terrorism, punitive damages. A lot of the common exclusions can be covered either through an endorsement or through a separate policy. When we're talking about certs and AIs, additional insureds, so the certificate of insured has the name insured, the address, coverages, limits, as well as the listed AIs. It is required to renew contractor's license with each state, and it is required to start working on a project. When we're talking about additional insureds or AIs, these are persons or organizations other than the name insured that's protected by the same terms of the policies. This can include a building owner, a lessee, a general contractor. And then there's special wording. Primary, non-contributory, this assigns the contractor's policy as the primary and the AI's policy as an excess in the event of a claim. There's also a waiver of subrogation. It allows the insured to waive its subrogation rights, for instance, like in a less favorable jurisdiction. And then in some cases, we can offer blanket AIs depending on the risk as well as the carrier. So if that's something that your insured would want to have, please bring it up with the underwriter. Professional liability, typically this is required by most contractors to obtain in addition to their general liability policy. It provides financial protection against defense costs and damages to third parties from faulty professional services, think advice or design. It is written on a claims-made form. The defense is typically within the limit, and there typically is a higher deductible. It covers bodily injury, property damage, and pure economic loss. The settlement typically includes monetary judgment for the increased costs associated with construction delays, design remediation, and or reconstruction. The insured must be legally obligated in order to pay should there be a claim. And then the per claim and aggregate limits, typically we see 1 million with a 2 million aggregate. Higher limits are available in our brokerage department though. Same thing with contractors' pollution. Quite often contractors are required to get some sort of pollution coverage. The CPO, not to be confused with comprehensive personal liability, we're talking about contractors' pollution. This provides third-party BI and PD as well as cleanup coverage for unintentional damages caused by the covered operations. So we can write this as a package. Job sites cannot be owned by the name insured. And this type of policy is written on a claims-made or occurrence form, depending on what the needs are. Prior acts coverage is available, first dollar defense is available, and then defense outside the limit is also available. Minimum premiums usually start around $2,500 for $1 million of coverage. We do offer maximum limits up to $5 million, but again, we can go higher in our brokerage department if needed. In the marine, so speaking about installation floaters, it covers the supplies and materials used to complete a specific job. It is project specific at a scheduled location. We can write these on a blanket location, however. As far as territory goes, it covers the supplies and materials that are on site, in transit, in storage, or at a temporary location. The coverage does end when the artisan portion of the project is complete. Reasons to purchase this particular type of coverage: it covers, or if the coverage for the artisan is excluded on the builder's risk policy, this will basically offer coverage. The builder's risk deductible exceeds the value of the artisan's materials. This is a good solution for that. It also provides first-party coverage for the artisan contractor. It's a really neat coverage. When we're talking about equipment floaters, it covers the loss or damage to the named insured's business tools and or equipment. So theft coverage is really difficult to add, especially for those small hand tools like drills, screwdrivers, that sort of thing. Blanket forms are common for hand tools. That doesn't mean that we cannot offer coverage. It just may not include theft. A scheduled list is usually common for those larger equipments like generators or compressors, that sort of thing. It can also cover non-owned and newly acquired tools for up to 30 days. When you're talking to your insureds about this, you'll really want to stress that they need to be in constant contact with you if they're acquiring new machinery, new tools, that sort of thing, and they want to have their policy include this newly acquired equipment. So have those conversations. The required information for this particular type of policy: we need the description of the equipment, we need manufacturers, sometimes we need serial numbers, especially for those larger equipment, and then we need to know the limit of insurance that is requested. When we're talking about a builder's risk policy, this covers the materials, supplies, and equipment on the job site until the building is complete. Coverage can extend to the contractor, subcontractor, or anyone directly or indirectly employed by any of these entities. It's used to cover new construction or remodels. The form is written on an all risk, which includes earthquake. It might exclude it later, so have that conversation with the underwriter if this is something that needs to be addressed. It does cover materials off-site as well as in transit. And you'll want to pay particular attention to the deductible. Especially for those inland marine floaters. You want to make sure that the deductible, the insured is aware of the deductible needed to pay should there be a claim. All right, finally, surety bonds. So purpose of a bond: it pre-qualifies a contractor based on their financial and ethical strengths. It offers public protection. It deters poor contractors from entering into the market. It ensures the contractor finishes on time as well as according to their contractor specs. And then it will reimburse for breach of contract for the related costs. So it's a protection for both the contractor as well as their customer. Bond amounts vary state by state as well as the type of bond. So the first things you're going to ask your insured is what is the name of the bond and how much are they being required to obtain. This will allow us to get you the proper application emailed over. Every state is different, every type of bond is different, so ask those two questions. An example would be Washington State has an artisan contractor bond for $6,000 for one class only. They also offer a general contractor for $12,000. So ask those questions, we can get you the proper application. We do have most of our applications on our website. You can go to gogus.com. You'll log in with your agency ID and password. Click on applications and forms. It's a drop-down menu. You're going to click on commercial and then you'll see the list of applications. If you can't find what you're looking for, please do reach out to us. We'll get you the necessary applications. Some classes, we do have the capability of quoting online. You're going to go to internet quoting. It's also a drop-down menu. Click on commercial. And then I believe there's artisan contractors. If you don't see what you're looking for, reach out to us. We'll get you the paper applications. If you have any questions at any time, please do not hesitate to reach out to us. For those Allstate agents, please email csr@gogus.com. You can also call us at 844-859-1766. For independent or non-Allstate agents, info@gogus.com, 800-562-8095. Again, my name is Carly Rahm. I'm the marketing representative. Please feel free to reach out to me should you have any questions. I'm absolutely happy to help. We want to thank you for working with us. We appreciate it very much. We look forward to working with you more in the future. Have a wonderful day.